Hello friends, welcome back to Chart Patterns. We are back with the third part of this series, that is flags. You can find the other two parts in here. There are also a lot of playlists here. Do visit and check them out. The 3-step analysis is the one where we do weekly analysis of the markets. We try to form a view of how the market can look next week. So subscribe to the channel and follow this so that you can have an advanced view of the market. Now let's start this video. As I said, this is the third part, that is flags and pennants. So the agenda for this video is, first we will look at the visual depiction, that is how the pattern structure looks like, followed by the type of pattern, whether it is a reversal or continuation pattern. Then volume consideration. Volume is very important for flags, so make sure you keep an eye on that. Then the trade plan, that is entry, exit and stop loss, and followed by few examples. We will also be discussing how to implement these and how to find targets on TradingView. So stay tuned and watch the video full. This is the basic structure of a flag. This is a bullish flag and this is a bearish flag. So there is a pole which is marked by the swift movement in the price, followed by a consolidation which is called flag, and then a breakout happens here and then the up move continues. Here the target is calculated with respect to the size of the pole, that is the height of the pole is the target from the breakout point. A pennant looks similar. The only thing is that a flag looks like a channel, that is a normal flag that you see. And there are few variations to this, like a flag can be either slanting like this or it can be horizontal like this. Both are same and the trading rules do not change for them. In a pennant, however, here you have a triangular kind of structure, but the trading rules remain same here. Hence these two are considered together. Now let's see an example. So this is the chart of ACE, and you can go and see the daily chart by yourself also to have a view on this. Here we can find a pennant and a flag together. If you see, there was an advanced move followed by a consolidation where volume decreases and then the breakout happens, and this part gives rise to another flag whose breakout has happened, target is still pending. So this whole structure is considered a pennant, that is, this is the pole, this is the pennant. Then from here another flag starts, this is the pole and this is the flag. Here the breakout happens, retest happens, and now the price is hovering here somewhere. If you see the volume here, the volume contracts as compared to the pole during this consolidation. Similar thing happens here. The pole is marked by high volumes, then there happens a consolidation and breakout candle happens on a high volume. Same thing happens here. The breakout candle happens on a very high volume. This is the basic structure of a flag. This works most of the time. Now let's understand the characteristic quickly. So flags are most lucrative and objective setups, as I said. This is because they are easy to spot and have very defined targets. Flags are continuation structures. As we saw here, this move is continued here. Similarly, this up move is continued here. So it is called a continuation structure. This is not a reversal structure. If a flag forms, you should ideally be looking to take trade in the direction of the flag and not reverse until and unless the flag fails. Now bullish flags are positive setups and they form most of the time as compared to the bearish flags. Breakout happens when the price breaks the flag or the pennant. So in this structure, as you can see, this is the breakout candle. Breakout happens here. Similarly, this is the breakout candle and breakout happens here. Now the pattern works best on the shorter time frame, that is hourly, daily and weekly. But if you go to the higher time frames like monthly, it is not very much effective there. That is because flags are basically short-term patterns, that is considered as a swift up move, then a small consolidation and then a follow through. In a monthly time frame, the things change, and the structure that looks like a flag in a monthly time frame can be traded as a triangle or a channel, but not as a flag. This is important because the targets change for channel and triangles, and same thing becomes very much different if you consider it a flag. So make sure you try to spot flags on daily and hourly most of the times. Now here are the trading rules. So once the breakout happens, that becomes your entry. Your stop loss is the low of this flag for aggressive traders, and for conservative traders you can keep the stop loss below the breakout candle. That is also fine. The target becomes the height of the pole, that is, this height becomes the target here. Volume is very important. The volume in this area should be decreasing. If it is not decreasing, then it is not a valid flag or pennant pattern. Now let's look at some examples. So if you can see, this is the weekly chart of India Mart, and here we have a pennant formation. This looks like a pennant formation. This pennant started from here, that is, this is the pole, and same is projected from here for the target. Now if you notice, after the price went here, it started consolidating on very low volumes, and again after this candle formed, the volume started expanding. This is with respect to volume. Now this candle, the breakout candle, this is the most important part here. Here the entry is taken above the breakout candle, that is somewhere here. The stop loss is placed below this breakout candle. If you also see, these candles have lower rejection points, and hence this become a very valid stop loss, because if this low is gone, then there is a valid reversal. Also make a note of this, that when price started advancing, it gave a down move and it got rejected from the same point. Hence your entry was very perfect here. The target is already hit in this. I think it was around 8200 or something. I will show you on TradingView how to exactly plot the levels and how to find your successive targets if the flag is very big. This particular stock I also posted on my Facebook group, and you can check that out. Now there is another example of Granules India. This is daily chart, and here we have the example of flag. If you can see, this is the pole, here the consolidation happened and then the up move started, and here the target was hit. So you can see that this was a easy capture of 30% here. The entry is marked here and not here because this candle was very big, I think around 6 to 7%, and hence this was the entry. And because this candle was big, so your stop loss cannot be here, which will be very far. So stop loss has to be below this candle. This candle gave a breakout on very high volume, and there was chances that this will sustain. Hence your stop loss has to be here and entry has to be here. From 230 to 280, it is a quick move of 25 to 30%. So if you see, this pattern started from here. This is the pole that formed. Here the consolidation is marked by low volumes, and hence this is a flag pattern. And once the breakout happened, there was swift move to the target. Also consider that when the price advanced further and came down, it took support at the same point. Again it came down and took support at the same point. So 280 is a very good point here, and it will act as a support. So when the target is met, it started acting as a resistance, and then it changed to support, which is marked by these 2 points. Now this is the chart of CDSL. This is the daily chart of it. Here also we have a very beautiful flag structure. If you see, we have a very beautiful structure here. Flag started from here, that is, this is the pole. This is the consolidation pattern that started, and here we have a flag. We have a decreasing volume in this area, and then when the breakout happened, there is a expansion in volume. This is the entry point. This will be your stop loss. Since the candle is small, so you can keep your stop loss here. Here is the entry point, and that's the target. So target was hit. As you can see, it started moving very slowly and then expanded here. And once the target is hit, there was a little profit booking seen here. So this is how a flag look. I hope these pointers are clear to you. Let me know in the comment section if you have any doubts. Let's move on to TradingView and see how we can do this in TradingView and how the targets can be found. Okay, let's consider the same chart, that is CDSL. I will remove all the lines from here and then let's start with scratch. So one possibility is that you draw the pole from here, then copy paste it, that is Ctrl C Ctrl V, and then from the breakout point you put it here and then mark your target from here. But this becomes a little cumbersome as it involves a lot of steps. So the other preferred method is you take the trend based Fibonacci extension. What you have to do is the first point you have to put is at the start of the flag pole. Then the second point is the end of the pole, and your third point should be at the breakout point, that is here. Okay, now you have your successive targets. So these are all the places where price will take some stoppage if it is a very big flag pattern. Your ideal and the final target is the 1% mark, that is the 100% extension above this. So 424 was the final target and it was reached here. Let's take another example, that is granules. So for granules we had this structure, right? Let's not rub this and just start doing the trend based extension over this. So we can start from here, the top is here, and we have to put it at the breakout point, that is here. Now see, your targets are given here, successive targets. Final target was 280, which was reached here. Before that also 0.618 and 0.5 are also important levels. So you can keep an eye on them, as in you can do pyramiding there or you can book partial profits there. But your final target will be 100% extension over this point. I hope these pointers are clear to you. Let me know in the comment section if you like the video, and do subscribe and share the video. Thank you so much.